I recently published a video forecasting where Nvidia's stock price could be 10 years from now. Of course, I made the audience aware of the challenges of forecasting the stock price so many years in the future with all the needed estimates and assumptions. Still, I forecasted that Nvidia's stock price could be around $1,700 per share in 10 years if the earnings per share expectations turn out as planned. Viewers were understandably concerned that Nvidia's market capitalization is already near $3 trillion with a market price of $116 per share. For Nvidia to hit $1,700 per share, the market cap would increase by roughly 15x to $45 trillion, which would be larger than the US GDP. That said, there is a nuance between share prices and market cap that I wanted to clarify in this video that I hope will reduce some concern regarding Nvidia's market cap as a percentage of US GDP. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So that nuance that I was talking about in the introduction of the video relates to share buybacks. Nvidia repurchased $7.2 billion of its shares in the most recent quarter, and on August 26, 2024, the board of directors approved an additional $50 billion to their share repurchase authorization program without expiration. So what that tells you is Nvidia will be buying back billions of dollars of its own shares, thereby reducing the share count. Now, if you look in recent years, Nvidia has been doing this for a while now. Their average diluted shares outstanding almost reached 28 billion in 2017, and it's now down to 24.85 billion. Why does this matter? Relating this video idea or this video topic, it's because the market capitalization equals the market price multiplied by the number of shares outstanding. And so you can understand if you're reducing the number of shares outstanding, the market price can increase without the market capitalization necessarily reaching those astronomical levels highlighted earlier. And I can share that with you here. Now, this was my previous video where I made the price prediction for Nvidia stock reaching around $1,700 per share. And understandably, investors were concerned because at that market capitalization, at that price, given its 24.8 billion shares outstanding currently, if I multiplied those two together, the market capitalization would be over $42 trillion in 2035, which would be larger than the US GDP right now, which is around 30 trillion. And so that's understandably a little bit unrealistic. However, if you were to reduce the number of shares outstanding, and in this example I have here, I reduced the number of shares outstanding by half. In this example, I have about 12 billion shares outstanding multiplied by the $1,700 stock price. And that would mean the share count, the market capitalization, would only be $20 trillion. I said only $20 trillion. I can't, those words came out in the same sentence. I'm a little surprised. But you can see here that the market capitalization would still be below what the US GDP is today. And 10 years from now, US GDP is likely to be much larger than where it is today, given inflation and given economic growth. So this would be a more realistic scenario. And even still, you look at the number of shares outstanding of 24.85 billion, the company already announced a $50 billion share buyback. I wouldn't be surprised if Nvidia's share buyback authorization continues to increase over the years if its earnings per share expectations go as planned. Now, in this video, I had the earnings per share expectations. Those are forecasted at 52% each year over the next 5 years. That's according to the analysts on Wall Street that are following Nvidia stock. And so if its earnings per share are growing at this rapid clip over the next 5 years, that means the company's cash flows are also rising significantly. Just in the last 2 years, Nvidia's cash flow from operations has soared from around $10 billion in 2023 up to $48 billion in the trailing 12-month period. So if its earnings per share continue growing, as is forecasted, it's likely its cash flow from operations will continue soaring as well. And that's important because that's a lot of cash for Nvidia, which runs an asset-light business model. Remember, it outsources its manufacturing to companies like Taiwan Semiconductor Manufacturing. So in order to grow its business, it doesn't need to reinvest in capital expenditure, building out more and more manufacturing facilities, more manufacturing capacity in order to support the growth in the business. It doesn't need to do that with its business model. And so growing earnings per share is more likely to lead to growing cash flow from operations over the long term. And you can see market price has soared in the recent 2 years following the increase in cash flow from operations and increase in earnings per share. Capital expenditures has increased over a trailing 12-month period for Nvidia. It's up to the highest level in the company's history at $1.9 billion in the trailing 12 months. But that's still a small percentage of the company's cash flow from operations of $48 billion. And that's important because the formula for free cash flow is cash flow from operations, and then you subtract from that the capital expenditures. Well, Nvidia's asset-light business model allows it to have a relatively small percentage of CapEx as a percentage of cash flow from operations. This is less than 4%, right? You take 1.8, let's say 1.9 billion divided by 49 billion. That's roughly 4% of cash flow up from operations that the company spent on CapEx. And this is at a level where it's been the highest in the company's history. So even at these higher CapEx levels, it's still only 4% of cash flow from operations. So given that the company is generating all this cash flow that it doesn't need to reinvest in the business, the next outcome is to return that capital to shareholders. And the most likely form of that capital return is through share buybacks. As you saw in the latest quarter, the company returned $7.4 billion to shareholders. $7.2 billion of that was through share buybacks, and only $200 million was through dividends. So Nvidia is very likely to increase the rate of share buybacks over the next 5 years if the earnings per share come as expected. So along the lines of this forecast, if things are going as forecasted, meaning earnings per share are rising as expected, then the company will be buying back shares more than expected, and the market capitalization would not rise by as much because the number of shares outstanding will be decreasing as its earnings per share and cash flow is increasing. So that way you can have Nvidia's stock price soaring to these levels of $1,700 per share or $2,000 per share without the market capitalization rising by as much because of the share buyback and how it lowers those numbers of shares outstanding. So I hope this clarifies my Nvidia stock price prediction. I know a lot of investors were thinking that it's not possible for Nvidia stock price to get to that level because that would mean the market cap would be unrealistically large as a percentage of US GDP. And I hope this clarifies and increases the likelihood that you can agree that if its earnings per share and cash flow from operations do increase at this rate, then the stock price can also increase at an astronomical rate because it can use those cash flows, and it will likely use those cash flows to lower the share count and thereby increase the market price without increasing the market capitalization. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.